Is the Bitcoin market bullish or bearish? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. Today is the last day of the promotion. After completing KYC and making a $100 deposit, you'll receive a trial fund worth $30. This is a great offer. There won't be such an event if you miss out on this one. On BitGet, you can receive a $10 trial fund. Once you sign up, no KYC, deposit, or trading is required. Alright, let's take a look at Bitcoin's market. Speaking of Bitcoin's market, let's start with the 4-hour candlestick chart. We can identify a clear price channel from the trend. Let's mark it out. Okay, touch points on both resistance and support levels are effective, I assume. Let's take a look, including the touch points. At these 3 points, on the lower boundary, the 3 touch points are effective too. We can see 3 touch points on both levels each. This indicates the price channel is valid. But what I'm most concerned about isn't about this. Instead, the role reversal. I believe this role reversal is clear, with definite boundaries. You can see from these points, right? The price action has touched a level several times, and the level acted as strong support, leading to significant rebounds. As the market shows, right at this point, after the price action touches the level, it goes up and is accompanied by significant trading volume. Next, you can notice a long lower shadow touches the support. Previously, the price actions dropped to around $27,200, where strong support holds. The current trend is crucial. Okay, after the price action breaks below the support, it returns to test it. This test is significant. Basically, there are 2 possible paths. I'll draw the 2 paths. After the price action breaks down the support, as in the scenario of a bearish path, the rebound is aimed at low volume to test whether the support would turn into resistance. After this test, the price will continue to fall. I'll mark it in red. Besides, we can estimate the scenario of a bullish path. How? Actually, this is a bottom reversal. I will draw the path parallel to the previous one. After the decline and bottom reversal, the price action will return to the support or continue to rise. So, this is the bullish path. Simply put, we need to identify which role the level plays. At the role reversal, around $27,200, we can notice that the upward momentum isn't strong enough. If it's a real bottom reversal, what development will it portray? Or in another case, in which the initial support turns into resistance, and the price continues to fall, what will it be like? In fact, these 2 scenarios can be analyzed separately. Besides, we can find a case to establish clearer criteria to identify the trend. Okay, let's take a look at a case that a bottom reversal occurs and is followed by an upward afterward. There's a case from the past market trend that left a deep impression on me. This is it. Personally, I'm impressed with this trend. You can see that the level being tested by the bottom reversal has many spikes found there. Look at this. This is an obvious support. Very obvious. It's being tested during the May 19th market crash. And after the price action rebounds, it tests the support again. And here, the support is tested once again. It holds up for 3 consecutive tests. As for the current trend, when the price action experiences a bottom reversal, it breaks below the support that's been holding the price so far. The price action breaks all the previous lows. Not only that, in the 4-hour candlestick chart, there's the largest volume bar within the entire range. It's only slightly smaller than the volume bar at May 19th market crash. The largest volume bar, at least within the rectangle. On the 4-hour chart, this is the largest bullish candlestick. Now, let's further analyze the market of a lower time frame. As the market shows, the current bottom reversal is a typical pattern. After the price action breaks below the support, it bounces back, then declines, and immediately surges again. Besides, the surge is with sufficient momentum. Let's look at what happens in the current market. As of now, after the price action declines, it rises back. However, it doesn't just stop above the support. Looking back at the current market, if we consider it from a bullish perspective, the price action should at least stand firm at around 27,200 US dollars. Why? We can refer to past market performance. Besides, the price action doesn't just stop there and stops moving. No, it keeps on rising upwardly for quite some time. As the market portrays, you can notice the upward movement continues at a significant distance for some time. It isn't a weak rise that can't even reach the support. After the rebound, after breaking through the support, it keeps on rising for a distance. If this happens, or a strong bottom reversal happens, to be honest, I'll directly buy spot positions. As for the futures, it's risky. But buying the spot positions to capture the next trend is a possible way of trading. No problem. Back to the current market. In the ongoing market, you can identify there are two possible trends. If we apply the bullish trend case mentioned earlier to explain the current market, actually, here shows a weak rebound. It doesn't even manage to reach a significant height, let alone 27,200 US dollars. So, I don't go long for futures or buy spot positions. However, if the price action surges and breaks through the resistance, I'll buy spot positions for sure. If we switch the time frame to a longer-term chart to get a bigger view, I'll erase the marks. You can notice that it lacks one wave. We have wave 1, wave 2, wave 3, and wave 4 here. This is wave 4. Supposedly, wave 5 should be coming after this, even though the uptrend for wave 5 might be limited. After all, wave 3 shouldn't be the shortest. But how can this be achieved? If the price action drops to 25,200 US dollars, both wave 4 and wave 1 overlap, it will be bad news, as the upward movement won't happen afterward. If the price action falls back to 25,200 US dollars, it means that it won't develop into wave 5. Okay, let's examine the second possible scenario we discussed earlier. Right there, there's a role reversal. If the price action bounces back to the support, yet it fails the low volume test, then it continues to decline. So, how will the trend be? In what direction will the market develop? What's the trait we can identify from the trend? Let's look at the daily candlestick chart. There's a particular point that left a strong impression on me. It's right here. I believe the price action here exhibits some typical traits. Okay, let's switch to a 4-hour candlestick chart. On the 4-hour chart, at the price range of around 58,500 US dollars to 59,000 US dollars, we can find an obvious role reversal here. It acts as support. At these points, you can see that during the subsequent trend, the trading volume surges when the price action falls. And when the price action rebounds, the trading volume shrinks. Next, the trading volume shrinks when the price action reaches the support, and it declines again with a huge trading volume. Later, the trading volume shrinks when the price rebounds. Once again, when the price action rebounds, the trading volume shrinks. When the price action falls, there's a surge in trading volume again. A surge in trading volume is registered when the price action falls. You can see how the trading volume progresses. I'll mark it out again. The trading volume expands when the price action falls. You may say that this is a surge in bullish volume. But the thing is, the trend isn't bullish. Indeed, there's an inside bar pattern. But it's not a bullish trend. Moving forward, when the price is tested, the trading volume shrinks. Since every test at the resistance comes with low trading volume, what market behavior will be expected? Well, I have a strong impression of this. Boom! Okay, the price action tumbles. Okay, after revising these cases, I believe we have a more profound understanding of the current market. Alright, let's get back to the current market. In the current market, if the price action rises back to 27,200 US dollars and keeps on rising, I'll consider buying spot positions right away. However, if it falls back during the test, while the trading volume surges, personally, I suggest you add positions if you already have short positions. As for me, I don't hold short positions. I won't consider trading because I've profited from the earlier market. So, it's fine to skip it. Maybe I'll trade when the trend is completely bearish. If there's an oscillation without a clear trend, it's not a good chance to trade either. Alright, let's take a look at the Ethereum market. As for Ethereum, we'll look at the 4-hour candlestick chart. This is the point we should pay attention to. You can observe a pattern here, which is similar to Bitcoin. The point is, if the price action continues to decline, whether or not we can see a surge in trading volume, at least, it should be higher than the trading volume. When the price action rises, or the price will rebound. We must keep a close eye on this. Okay, let's shift back to Bitcoin. When Bitcoin declines, are there any criteria to consider? Yes. The trading volume is higher than the one during the price action rises. With this, I believe this is a rebound. Next, let's take a look at one more thing. The trend line. Trend line. How do we analyze the trend line? Okay, I'll draw it on the chart. It's right here. I believe that if the price action breaks below this trend line, I'd say that the bullish trend is invalid. Completely invalid. If the price action falls back to $25,200, the 5-wave pattern won't be expected then. But if the price action breaks below the upward trend line, it indicates a zero chance for a bullish market to exist. Absolutely no chance. Since there are only 2 touch points on the line, it's yet qualified to be announced as a trend line. Supposedly, a valid trend line must have 3 touch points. It's only considered a potential trend line with 2 touch points. However, this is the only trend line we can identify from the trend. Let's refer to the small bull run. In 2019, there's a trend line found there. It's drawn here. As you can see, the price action touches the line several times. Okay, you can see that the price action touches several times along the line. And then it breaks below the line and is followed by an oscillation, which put an end to the bullish trend. Since then, the price action even breaks below the previous lows. It's followed by an uptrend too, but it doesn't develop into a bullish trend, as the bullish potential had already vanished. Lastly, let's proceed to check on the situation of Bitcoin futures. As for CME futures, the current uptrend occurs during the weekend. Hence, the CME gap stays around $26,500. It's possible to return to this range. So, if you have gone long or bought spot positions, you ought to be careful, because the price will return to $26,450. Let's get a more precise figure. Yes, it's right at $26,450. Indeed, the spike is pulled back. But since the uptrend is out of the coverage of the CME gap, it's very likely to have a retracement to fill the gap. Please pay close attention to it. Alright, thank you. You're welcome to like and share my videos. And subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.